Mr. Krishna Kumar, who's joining us this morning, and get his perspective on things as they stand. Mr. Kumar, thanks so much for joining us. Markets very quiet, looking, for some kind of direction, which doesn't really seem to be coming anytime in the near future. How do you really make sense of a market like this? Would you continue to wait for lower levels to buy in? Are you still, looking at perhaps a longer term time frame before you become a little bit more positive on the kind of potential returns we might see? What are you really expecting going forward?
Yeah, I think we are bottoming out in terms of growth. I think the budget did have several initiatives in terms of key steps to address the NBFC sector, also address the capital requirements of the PSU banks. These are two major sources of credit for the mid-market economy, and that's been strangled in the last many years. The PSU banks have not been lending, and also NBFCs were tight on liquidity in the last 6-8 months. So those issues and the risk aversion has been kind of addressed by the measures in the budget. Also, the RBI has been stepping in with more liquidity and cutting rates, and there are also steps to in the budget to revive the real estate jobs at the lower end through more focus on affordable housing. So these are expected to kind of kickstart, the economy, and we'll see a rub-off, across the other sectors also. The budget continues to lay emphasis on infra and the overall, benefits to the mass population in terms of tax benefits, and also some of the continuance of the rural income scheme. So these basically will address the issue. As you have seen already, the 10-year has been moving down. The credit spreads are a little bit improving, though not as much expected. With more borrowings from global markets, it would further push the domestic yields lower. Currency has been a lot more stronger. So we seem to be in a fairly good wicket at this point in time from the macros. The growth definitely, because of some of the disruption that happened on the NBFC space has been hitting the economy, and we see a normalization.
KK, we both are bullish with that disclosure, and I hope that economy recovers. What you've expressed so far, I think, is a template which is centered around a belief and a hope that things will become better. But if I talk about today, tomorrow, this month, next month, there is a problem. Headline from Ashok Leyland is that they're shutting down their plants because there is no demand. The news from Bajaj Auto is that exports are suffering. The news from Tata Steel is that the volume contraction is just not there. FMCG companies are openly telling us that they are not able to sell basic products like soaps and shampoos. So what we want to understand from you, KK, is that do you think the bad will get worse before it gets better, and are we in for a prolonged winter this time around?
No, I think, as I mentioned, Nicholas, that we are in the bottom of the cycle, in terms of growth. The first quarter will be the bottom, and we'll see a recovery from this quarter. What you hear about the news flow, etc., is a result of what happened in terms of slowdown in the last 3 to 6 months. So, with this correction that is happening in terms of the steps the companies are taking, I think things will, get addressed on the cost front. But however, on the demand front, I think things are not so bad as you seem to be projecting. I think definitely there are cost implications on the BS6 transition, etc., which are, which have been impacting the auto sales. But our channel checks with the dealers, with the ground level, indicate pre-buying has started in the Western markets already. So we do see that things will improve into the next 3 months. That's what I was trying to tell you before you interrupted. That there are signs already on the ground that things are getting better. What is happening now in terms of shutdowns, etc., is a result of the slowdown in stock level of the last 3-4 months. So I think we already are seeing things getting better. The NBFCs are getting more access to funds. And as they push more money into the market, you will find that car financing, truck financing, two-wheeler financing, trade financing will get a lot more easier. And with rates also coming down, we see that the consumer and the dealer would be incentivized to kind of move on with trade. So I think that's the construct that we are working on. And so we are bottoming out now as we speak. And by September, I think the markets will be looking at a different picture, which will be a lot more healthier, a lot more optimistic. And we as investors have to put in money when things are bad, when things are seemingly uncertain, and that's when you get good deals, basically, right? What better is a good time to buy a stock when the factory is closed for shutdowns, right? Because of lack of near-term demand.
All right. So lack of near-term demand, that's what we continue to focus on. What would you go about seeing as the ideal state right now, Krishna Kumar? Would you look at large caps? Would you look at mid caps as names that are totally beaten down, or would you be risk averse, stick to those few names that we do see some attraction in currently? I mean, how would you really go about investing in this market?
Yeah, while you will find there is a perceived sense of comfort in large caps, but the most important thing, the rally in large caps has been very narrow and focus on companies which are able to deliver you visible quarter-on-quarter earnings, and long-term stories probably have been neglected. So we do see that the rally, as whenever it happens, we'll see that it's more broader within the large caps also, and the rally will move down the cap curve, because you will see NSE, BSE, and mid cap, small cap indices trading at 20-25% discount to the Nifty earnings, Nifty PE multiples. So to the extent there is a lot of value gap that is opened up already in the mid and small caps, and last 2 years we've seen this gap narrowing and widening basically big time. So we see that investors should put a lot more money into the bottom end of the market, the mid caps and the small caps, as an allocation trade, and we think a good way to get into the markets for new investors could be get into good multi-cap funds, which will have a flexibility to move across the large, mid and small cap space. Typically these funds have a 45, 30, 20 kind of allocation, and they would capture the stories across the cap curve, and also provide fund managers the flexibility to move down the cap curve or up the cap curve as the market would kind of push. So I think that would be a good strategy to get into more multi-cap funds if one wants to be a little more cautious at this point in time and wait for more strong signals from the market.
Krishna, I just wanted to understand what the outlook is when it comes to auto. It's been fairly tepid demand. We've seen a complete deceleration when it comes to volume growth. For two-wheelers, MHCV volumes as well have contracted quite significantly. There's tight liquidity conditions. There's the slowdown in the rural and urban growth. And all of that really seems to be weighing down on the sector. Ashok Leyland now shutting down its plant for a temporary period. What is the way ahead, particularly when it comes to the earnings? Are we going in with expectations and a certainty that it's going to be, for the next 12 months, a tempered demand for the sector?
So we would see that the first half of this year is where there is a lot of weakness. Basically, sometime around September, October, as the festive season comes in, and also closer to the BS6 transition, we would see that the demand does improve from here. So we would think that the second half would be a lot more stronger, and the year would end across segments between 5 to 12% kind of growth. Number around 7-8% would be the number we would look at for commercial vehicles, and little lower for cars probably. We think that FY21 would be another year where you get into double-digit growth. You will see some improvement into FY21 over FY20. So that's why we do see that the earnings having a big knock in the first quarter and the second quarter, which would progressively then get better over the second half of the year and into the next year. So over a 12 to 24 months, I think you would find that there is a lot of growth that will come in. At the same time, in the next 2 to 3 months, you will have softness that we are witnessing, and there will be an improvement towards August, September.
How do you think the NBFC, there is a huge concern on the way how the DHFL issue has been handled. Nobody has separated financial creditors from operational creditors. We also know that there are problems with other NBFCs, especially SMEs, which are NBFCs which are focused on SMEs and MSMEs. So do you think this entire NBFC issue will continue to linger? It will be a festering wound which will disturb the market at least till December. Until the time a clear resolution is not in sight for a Yes Bank or DHFL, there would be a problem.
I think some of these issues are isolated in the sense particular to some companies. I don't think we should paint the sector with the same brush. If you look at the recap of PSU banks, I think it's very important from the perspective that these were the lenders of last resort for many of the mid-market and the MSME companies, and they have been having low liquidity or not lending in the market for the last 5 years. So with some amount of capital infusion, I think the flow to the mid-market and the MSME, SME segment will improve, and that itself will be a great relief for the MSME sector. And that should be something positive, because even if NBFCs are slow in moving in, I think the banks will move in. The second thing also is that clearly the comfort that the government has given in the budget through taking the first loss on about 10% of the 1 lakh crores of securitization deals clearly shows that the government is behind sector. They are concerned about what is happening. There is no moral hazard now by stepping in. So while they will not try and rescue a particular company, but I think they will definitely